Hello, Mark Sturdy here with this week's highlights of 7 Days Ahead's multi-asset technical strategies, week of the 16th of November 2021. If you'd like to subscribe to this weekly strategy document, then please get in touch 07849 922 573, Mark Sturdy at Sevendaysahead.com. If we look at the summary, we are out and out bullish of the dollar against both the euro and sterling in all time frames. The new news, we have been bullish of the dollar against the euro for some while, but now we are unambiguously bullish for the dollar against sterling. Let's just look at that. What's happened over the last week? This is the sterling has failed to break up through this in the long term. Has failed to break up through these multiple horizontals from prior lows in the long-term chart, but in the medium-term chart, in the weekly chart, this has now happened. The sterling has broken down through this horizontal 134.82 and the diagonal there. We think this is important, and we think the market will go further. That's new news. Against the yen, we are bearish of the yen. Sorry, I beg your pardon. Bearish of the yen, long and medium term, very well set up, but short term in the yen has been dithering in a trading range, and we'd want to see the yen break up, weaken up above 114.69 before we became out and out bearish of the yen, bullish of the dollar. And sterling euro, as you might imagine, since both the sterling and the euro are weakening against the dollar, there's been not much change in the cross. As regards stocks, we are still bullish of the S&P and still bullish in all time frames of the Euro Stoxx 50. We are bullish short term in the FTSE. Let's just look at that. There's a completion here of a continuation triangle, but because of this slightly unexciting situation long term, we are less out and out bullish of the FTSE long term. There's lots of failures above the market. It would have to do a lot of work for us to be convinced long term. Break above 7885. Worth noting that also, despite this triangle, the market's got to overcome this falling diagonal in the FTSE. It is nonetheless good short term, and in both the December weekly and the daily. The Nikkei, we are very bullish for the Nikkei long term. Unlike the FTSE, we're very bullish for the Nikkei long term and medium term, but there's a trading range here that it's got to break, and they're more short term. You have the detail. It's got to get above 3620 before we get excited in all time frames in the Nikkei. Bonds are complicated. They're pausing and retracing, so there's not a lot of congruity in all the time frames. Here's the long-term US. It's broken up through this massive resistance here. Yields do look set to go higher. It is close to completing, the US bonds, that is close to completing a head and shoulders reversal in yields, driving yields a lot higher, but it hasn't done it yet. Short term, it's dithering. We remain for higher yields in the gilts, with keeping a close watch on this retracement. Basically, the gilt market is broken out of its many year long-term decline in yields. There's the breakout. Here is the completion, unlike the US market, the completion of a head and shoulders reversal in yield terms. But the market has retraced very aggressively. It's now testing this neckline. In price terms, of course, prices have, while yields have bounced, gone lower in retracement, prices have bounced, and we would use this Fibonacci 61.8 as the prior high here. Basically, if the market wants to get through this prior high, then we would abandon our bullish of yield, bearish of price position in the gilts, but it hasn't happened yet, so we're watching that closely. Oil, we remain very bullish of both oil and gold. The picture in oil is now familiar to you, I'm sure, from past highlights. Broken above this important prior high here, which was basically resistance from these prior lows here. That's good long term. This is the long-term December chart. Here is the medium-term chart in December, which we think is a Head and Shoulders reversal. For the last 4 weeks, the market has paused, though. So short term, we are watching this support, I think the short-term support is 79.39, and we are watching the support from this, more or less, that neckline there as well. Close beneath that on the week would be very disappointing, and we would revisit the notion that we're out and out bullish of oil if it couldn't hold this neckline support. Gold, we're now bullish. It's broken through this. It hasn't closed above this diagonal in the monthly chart, but it's making a good, a spirited penetration of it there. It is supported by a triangle, continuation triangle, bullish continuation triangle, which was completed last week, which suggests moves up to 2150. Short term, another medium term look on this is looking not at the triangle but at the support from this prior high 1725 and the push above this succession of highs here, creating a multiple bottom on the break up through 1836 or 1839. So we have a multiple bottom here and a completed triangle here, both of which I think are very bullish for gold. Short term, it just shows the detail of the push above these prior highs. And so that's clearly bullish in our view. Thanks very much.